I am curious, when you still get, yes, we are seeing a trend downward in those unemployment claims, but they're still awfully big numbers. And one would expect to see sort of a fat tail on this, right? That a lot of people are going to be out of work for quite some time. The market doesn't seem to be too concerned.
No, first off, thanks for having me back. But you're right. I mean, I've come on with you guys for a couple of months saying the market is a forward-looking mechanism. As terrible as the data is that we're seeing here in the United States and around the world, stock markets around the world are saying there could be better times ahead. But you're right. I mean, over 40 million people have filed for initial claims the last 10 weeks. Yet if you look under the surface, those initial claims have actually dropped the past 8 weeks. Now, again, 2 million people filing last week's a terrible thing, but the trend is less and less people are filing as things continue to open up with all the fiscal policy. Look what Japan is doing. Nearly 40% of GDP in Japan, they're seeing fiscal stimulus as a percent of GDP. That much fiscal stimulus. Seen it in Europe, seen it in the US. I mean, it is what it is, right? There's a ton of stimulus out there. The economy is slowly getting off the mat. Look at the consumer confidence number the other day. Yes, it's still very, very low, better than expected, actually higher than the month before. A lot like that small business survey we saw recently, where 6 months out, small businesses are optimistic. So maybe we can open up the economy a little bit more than people think the second half of this year. And that's what the stock market is sniffing out.
Always forgetting to unmute myself. Ryan, it's Adam. Good to see you.
I don't want me to do
I want to dive deeper into what you just said. And here's where this question comes from. Assuming we put half of the 40 million back to work, that's still 20 million who are unemployed. And we know that consumption may be coming back slowly. So you wrote that, under the surface, something quite rare is happening, that 90% of the S&P 500 components are above their 50-day moving average. Is the market ahead of itself, given the unemployment numbers and what we see with consumption?
Yeah, Adam, we think it could be, right? I mean, S&P is up 35% from those March 23rd lows, yet the economy is poor, it's historically poor, like we just talked about. But again, the market is telling us something. When you see that many stocks in the S&P above their 50-day moving average, 9 out of 10 of them, I know we're getting a little numbery here, but that's a lot of breadth. That's a lot of strength. We took a look at what happens after that. That's only happened 11 times going back the last 18 years, guys. A year later, S&P is higher 9 times, up like 15, 16% on average. So in the near term, after this rally, we really think, sell in May, go away. Well, May's up again this year, like it usually is. But the summer months can be rocky, perfectly normal. But the strength and the blast that we saw off of these lows is not a bear market bounce, but in essence, a continuation or maybe a new bull market, I guess I should say. But we don't anticipate breaking those March 23rd lows, and we don't anticipate going back and testing them. Maybe a well-deserved 6 to 8% correction. And then that upward bias you tend to see late in the election year could take over once again.
Hey, Ryan, this is Dan Halley. I just want to kind of ask about retirement savings. If you have someone who maybe decided to kind of rebalance their portfolio, move away from stocks and into, bonds, kind of more safety, is now the time to rebalance it back and go back into stocks and kind of use the market's upward trajectory now?
Yeah, Dan, I mean, it's tough because it's all about the time frame, right? Let's just say someone's 15 to 20 years away. Yes, we think, you could wait for a little bit more of an equity pullback here, but there really is, when you see a 10-year yield around 70 basis points, we get it. The forward PE on the S&P 500 is up over 21. That's one of the highest numbers we've seen in decades. So stocks are, quote unquote, overvalued. But then you look at bonds. Bonds are really overvalued. We still think, going out 5, 10, 15 years, stocks are still the place to be to find some appreciation more so than you're going to find in fixed income. But the glory of this whole thing, and it's been terrible what's happening to the economy, I get it. But that 34% correction, now we've just had this massive spike higher. People that have a plan that do rebalance, but don't drastically rebalance, that's an opportunity. If you've got a long time to go, these pullbacks are scary, but from a retirement point of view, it's going to happen again, and there are going to be opportunities at the end of the day.
Hey, Ryan, I know that the House is considering a revamp of the PPP, right? And also Mitch McConnell has talked about the need for more stimulus. He's not the only one. There's been bipartisan agreement that some kind of further stimulus is needed. If that doesn't materialize, what does that mean for the market? Is further upside in the market contingent on getting more money out there?
I don't know if it's totally contingent. I think what we want to see is continued, more testing, less positive cases of COVID-19. Those are probably a little bit more up the ladder. But let's be honest, the market is pricing in record fiscal stimulus, record monetary stimulus. And if that were to go back and forth and maybe go away, at least on the fiscal side of things, the market could be a little upset. And we haven't even talked about US-China, right? I mean, they are really starting to go at it again. And the market's shaking that off too. So that's kind of that other boogeyman that we're a little worried about as we get into the summer months. But at the same time, it's an election year. There's a lot of things swirling when it's an election year. Will there really be a fight with China, right ahead of an election? We tend to doubt that, but that's a worrisome thing also that's out there.
It is indeed. Thank you so much, Ryan Detrick of LPL. Appreciate it.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.